Tomorrow, 10th December 2025, mark this in bold on your chart. Nifty must hold 25,700 to 25,850 to keep the short-term bounds intact. Today Nifty closed 25,839.65, slipping below the 25,900 psychological floor and showing distribution across several mid-caps. If Nifty fails the 25,700 to 25,850 band at the open, prepare for a retest of 25,300 to 25,450, the deeper memory zone. BankNifty closed 59,222.35 today. For tomorrow the early 15 minutes will tell the story. If BankNifty reclaims and sustains 59,600, the banking-led recovery remains plausible. If it trades and stays below tilde 58,800, we'll be in a faster correction mode toward 57,300 to 57,800. Write these down. Nifty 25,700 to 25,850 guard. BankNifty reclaim 59,600 to keep bulls alive. Stay with me. In the next 30 seconds I'll explain why global yields, the dollar, and FII flows make these levels critical, and how to use the opening 15-minute rule as your primary intraday decision tool. Global market overview, and why it matters for India tomorrow. Global risk dynamics tightened into today's close. US macro commentary and year-end positioning pushed yields modestly higher in pockets, while the dollar showed resilience, both of which pressured emerging market flows. For India, two crosscurrents matter most. US yields and Fed expectations. If US yields rise and the Fed keeps a hawkish tone, global liquidity tightens and FIIs tend to reduce M exposure. That is the fastest way to see selling pressure in India. Dollar strength DXY direction. A firmer dollar typically translates to a weaker rupee that feeds through to margin pressure for import-heavy names and raises the probability of FII selling. So tomorrow morning, check the overnight US 10 years yield, DXY, and Asian futures. These will bias FIIs even before domestic headlines settle. If those snapshots are benign, domestic policy tailwinds can still drive selective strength. If not, expect narrow, defensive trading. Indian market overview, fundamental plus technical. Fundamental. RBI's December MPC earlier this month moved policy to a more accommodative stance, repo trimmed, commentary supportive of growth. That remains a structural positive for banks and credit-sensitive sectors. Nevertheless, the immediate market reaction shows that flows and FX are dominating near-term price action. Today's weakness reflects foreign selling and currency worries taking precedence over policy optimism. Technical, official closes. Nifty, 9th December 2025 closed 25,839.65. BankNifty, 9th December 2025 close 59,222.35. Given these closes, adjust your pivots, treat 25,700 to 25,850 as the immediate Nifty guard. If it holds, bulls have a chance to recompose. Treat 59,600 as the BankNifty reclaim level for confirming a banking-led lift. If either fails decisively at open, the next structural support sits around 25,300 to 25,450 for Nifty. Sector performance today, top plus weakest, reasons. Top, relative some large banks and select financial services stocks held up better than the index, participants appear to prefer high-liquidity financial names as a safe exposure within domestic markets. Weakest, realty, capital goods, and several mid-caps underperformed. Mid-caps are bearing the brunt of FII selling and rupee pressure. Auto ancillaries and import-heavy mid-caps also lagged as USD INR moves made inputs more expensive. Takeaway: leadership is narrow. Rallies without mid-cap participation are fragile. Watch breadth. Top gainers and losers, news-based plus technical reasoning. Gainers, example names select large private banks and defensive large caps. These showed relative strength on lower volatility days, higher liquidity attraction. Why? Policy tailwind plus high free float plus lower perceived execution risk. Losers, example names mid-caps, realty and certain capital goods names with high leverage or heavy import components. They corrected on currency fears and foreign sell pressure. These are structural observations based on close-of-day contribution tables and live market coverage. Use them to assess whether the market's next move is breadth-driven or narrow. FII DII activity, cash plus derivatives, impact on market psychology. Snapshot: early DEC trend. FIIs sold heavily in early December. Reports show large net outflows. First week see 11,820 crore rupees. DIIs are buying on the margin, but their support typically leads to narrower, more concentrated rallies unless FIIs slow selling. Today, 9th December exchange provisional tables show DIIs contributing positive net buys while FIIs were sellers. This tug-of-war explains today's intraday weakness despite selective large-cap resilience. Look at derivatives OI. Round number strikes, ~26,000 for Nifty, ~60,000 for BankNifty, show hedging and positioning. Watch OI change on any pivot break to judge whether moves are flow-driven. Market psychology. Domestically cushioned but externally pressured. That makes the market vulnerable to quick momentum swings if the global snapshot shifts. Technical analysis, daily plus hourly plus 15 minutes. Daily, the uptrend since late November is losing momentum. Lower closes and shrinking breadth indicate the trend is vulnerable to a rotation. A clear daily close below 25,700 would signal a deeper corrective phase. Hourly, the hourly chart is a watchtower. An hourly close above 26,150 to 26,350 would restore short-term confidence. Failure to hold above 25,700 will flatten the picture to neutral bearish. 15-minute. Your micro-decision frame for tomorrow. Mark the first 15-minute high-low. Rule: only act after a break and confirming 30 to 60-minute follow-through. In volatile, flow-driven days this rule will save you from false breakout whipsaws. Key support or resistance zones, educational. Nifty, resistance, 26,150/26,350. Support, 25,850/25,700/25,450/25,300. BankNifty, resistance, 59,800/60,200. Support, 59,800/58,800/57,800/57,300. Key levels, educational, never advisory. Mark these tonight. Nifty guard, 25,700 to 25,850, primary decision zone. BankNifty reclaim, 59,600, if reclaimed and held, bullish tilt. Deeper supports, Nifty 25,450/25,300, BankNifty 58,800/57,800. These are gates, use them to define bias, size, and risk. Market psychology. Right now, the emotion is mixed. Optimism around RBI's accommodative tilt plus anxiety about FX and FIIs. That combination leads to surface strength in select names but underlying fragility across market internals. Traders should lower size, wait for confirmation, and avoid emotionally chasing headlines. Important news and drivers, domestic plus global. Domestic. RBI's December action is still the core domestic macro supporting banks, but watch any new RBI comments on FX intervention or liquidity management. Such commentary can change the rupee trajectory and flow math quickly. Global, US CPI prints, Fed speak, and DXY remain the headline drivers this week. A surprise in US data can flip FII flows and convert a tentative recovery into a steep sell-off or vice versa. Calendar, mark major US macro releases for the next 48 to 72 hours and monitor Asian session risk appetite each morning. These are the quickest early warning indicators for flow shifts. Tomorrow's market outlook. Bullish scenario. If Nifty opens above 25,900 to 26,000, holds 25,700 to 25,850, BankNifty reclaims 59,600, breadth improves and FII's slow selling aim for 26,150 to 26,350 as the next fight zone. Bearish scenario. If Nifty fails 25,700, BankNifty drops under 58,800, and FIIs intensify selling, expect a retest of 25,450 to 25,300 and potential acceleration into lower support clusters. Decision checklist to mark tonight. Nifty 26,350/25,850/25,700/25,450. BankNifty 60,200/59,800/58,800/57,800. Watchlist for tomorrow, 2 to 4 names, educational technical reasoning only. SBI, watch whether it holds intraday pivot, sector leadership clue. HDFC Bank, validation name for banking strength. Auto supplier import exposed mid-cap, rupee bellwether, early weakness indicates margin pressure. A mid-cap clearing a base on volume. If it participates, rally breeds. These are structure watcher names, not trade advice. Mini educational insert. Opening range confirmation, 30 to 60 minute follow through, Mark first 15-minute high-low, wait for a break plus 30 to 60 minutes of confirming price action and volume. If the break holds, treat as directional. If it fails, expect mean reversion into first support. This simple discipline avoids most early falls entries. Recap before we close. Today's closes, Nifty 25,839.65, BankNifty 59,222.35. Mark Nifty 25,700 to 25,850 and BankNifty 59,600 as your critical decision gates for tomorrow, 10th December 2025. RBI policy remains supportive, but rupee weakness and FII selling keep the market narrow and reactive. Use opening 15-minute rule, watch global yield and DXY snapshots, and adjust size if breadth is weak.